Hey traders, I just want to talk to you about the FTSE 100 on the daily time frame. We have a very interesting situation to bring before your eyes and a potential sale opportunity on this daily time frame. What is interesting is the fact that we've had the all-time high printed here late May. As you can see on the 22nd, we made an all-time high, just rejecting 7,900. But what has happened since is the interesting part, because as you can see, price has made this high low, but it hasn't been able to really break above the 50% Fibonacci retracement, which kind of rejects this level as well, 7,800, which is the penultimate all-time high last seen earlier this year in January. Okay, so what is interesting about it is the fact that we have identified this as a potential lower high before a potential resumption in a downward move. Apart from the fact that we haven't been able to break the Fibonacci retracement at 50 and, of course, 7,800, which is a significant round number, if we look at the smaller time frames, which we typically go to look at the shorter and medium term sentiments, is the fact that we've got an ABCD pattern inside an ABCD pattern. So as you can see here, just to give you a bit of context, we originally had our 50% Fibonacci retracement from high to low, and it really just failed to break convincingly the 50% Fibonacci retracement, like I mentioned. But as you can see here, we've got point A, B, C, D. Now, if we drag our Fibonacci projection tool from point B to point A, like we typically do, we have rejected, or haven't been able to really convincingly go beyond the 1.272 extension. If we look at A to B equaling C to D, we have, as you can see here, got perfect symmetry, more or less, between point A to B equaling C to D. There we have it, there and there. So that is one ABCD pattern, the main one. But if we look at this ABCD pattern, you can see that we've got an ABCD pattern inside an ABCD pattern. And if we drag our Fibonacci extension tool from point B here to point A, then we have the rejection of the 1.272. There we have it. We've also got symmetry between point A to B equaling C to D. There we have it. There we are. So how are we going to trade this one? Well, it's quite simple. We're just simply going to go to the daily, and we are going to identify yesterday's close as a bearish pin bar reversal. Some of you might see this as a hammer. That's absolutely fine, but there's one extra shred of evidence I want to bring to your attention, and this is seasonality. If we go to our friends at Equity Clock, we can see that historically we have a bearish month in June. There we go. You can see that over the past 20 years we haven't had this surge in the FTSE, and it looks pretty bearish. In fact, it looks like one of the most bearish times of year, apart from January, which has historically been bearish. If the past 20 years is anything to go by, I prefer 50 when looking at averages like this, but honestly, I would say that 20 is a good litmus test. So what we're going to do is we're going to trade the break of yesterday's low, entry below the low, stop loss above the high. We're going to have the previous swing low as our target. That gives us a 1-to-1, but I imagine that this will be a complex retracement overall. So we could get just one big A, B, C, D pattern here, and we can use our Fibonacci projection tool to really kind of get that target, or second target. Our first target, like I mentioned, is the previous swing low. So if we extend, we can see the 1.272 all the way down here at 7,539, and the 1.618 at 7,433. Okay, so that's decent reward to risk. That's about, if we're risking 2% for 6, that's a 3-to-1, a very straightforward 3-to-1 if it goes our way. Okay, so this is a reversal. I would like to really kind of like reiterate, it's far less likely than a trend-based play, but obviously if you like it, take it. If you don't, don't. Okay, so that is the FTSE 100, and today is the 5th of June. Happy trading, folks.